This is the Asia Trade. I'm Shery in Tokyo.
And I'm Annabelle, Droulers in Hong Kong. The top stories this hour. Donald Trump touches down in Milwaukee for the Republican convention, a day after surviving an assassination attempt that's shaken up the presidential race. President Biden to address the nation shortly from the Oval Office, while his campaign team considers how to reshape his embattled run for re-election. Plus, global markets begin reacting in Asia, with haven plays and the so-called Trump trade set to gain momentum, including, Shery, a stronger dollar.
Yeah, we were already watching some of those hedging strategies play out through the markets, but we're continue to watch whether we see those gains from the Trump trades, who are the winners and who are the losers. Right now at the open in U.S. futures, the first reaction in the markets to the shooting of Donald Trump. We're seeing pretty muted reaction in U.S. futures market, but what I'll be watching is really the Treasury's cash trading session. Now, that doesn't happen until later in the London session because Japan is away on holidays, but of course, we will be factoring in potential repricing of fiscal policy, inflation expectations, and where the rate cuts go from here from the Federal Reserve. But take a look at how Asia is coming online as well. As I said, Japan away on holidays, so what we'll be watching is the Japanese yen. We had already seen a big rally last week. This is the picture across Asia because we will continue to watch whether that safe haven trade actually plays out. Guys, if you switch up the board, you can see what's happening in Asia. And we also want to check out what's happening with offshore yuan as well in Chinese markets, given, of course, that we are expected to see potentially more rhetoric against trade and that relationship between China and the U.S. playing into the markets, and those trade-sensitive, those tariff-sensitive markets such as Australia, such as Korea, will be in focus, Belle.
Yes, certainly Shery bracing for more volatility, but Donald Trump, meanwhile, is not letting an attempted assassination derail his plans to attend the Republican National Convention, flying into Milwaukee today for the gathering that will formally nominate him as the party's presidential candidate. Bloomberg Balance of Power co-anchor Kayleigh Lyons joins us live from the city. And Kayleigh, we know that President Trump, or rather former President Trump, has just touched down in the city. Just give us a sense of the tone on the ground and what sort of color you can provide.
Well, Annabelle, this is just significantly different than what this week was going to be, which was effectively going to be a coronation of Donald Trump as the Republican nominee. There was going to be excitement around his selection for his vice presidential candidate. There still will be. We do not know who that is yet. And yet the very tenor and feel of this convention in Milwaukee is different as a result of that attempted assassination yesterday. He, of course, survived it. He was only slightly injured with the bullet piercing his right ear. And Donald Trump, in announcing his decision to come to Milwaukee earlier than planned, said he considered delaying his trip here to Wisconsin, but decided not to do so, not allow a shooter, to use his words, or potential assassin to force a change to scheduling or anything else. That said, once he arrives and is here with the other delegates, the other selected speakers at this convention, the tone of their remarks is likely to be very different than it might have been in the aftermath of this, as we are seeing bipartisan calls on both sides of the aisle to condemn political violence, to try and preach unity. And I would expect that that is similar to what we will hear from President Biden, who will be addressing the country from the Oval Office less than an hour from now at 8 p.m. Eastern time, doing so, of course, as President of the United States, but having to do this delicate balance where he is also speaking as a presidential candidate who is running against the very man who was shot in Pennsylvania yesterday.
Kayleigh, we're looking at this iconic photo of President Trump really waving his fist, yelling, fight, fight, fight. I know that you've been talking about it on your show, Balance of Power, about really the political environment right now across the U.S. Is there a chance that we could see more violence headed into this election?
There absolutely is a chance, Shery. That's something we've been discussing all day, is the likelihood potentially of increased political violence as we get closer to November. I would say that Donald Trump, the Trump campaign, the Biden White House and campaign have all been pushing to tone down the rhetoric, lower the temperature, say that there is no place for political violence in America. And yet, as we all saw in real time yesterday during that rally, indeed, this is something that has happened. This has happened throughout the course of American history. Now, you mentioned that image of Donald Trump in the immediate aftermath of the shooting, raising his fist, mouthing fight, 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 as he had blood trickling down his face. Immediately, you could see that having a galvanizing force within the base, the projection of strength from Donald Trump. This idea that not only is he a former president, a presidential candidate, but also a martyr in some ways, someone who is seen by supporters of him to have been victimized or targeted. All of those ideas could be reinforced by the events of yesterday. So what we're likely to see is that this does have a galvanizing impact on Trump supporters, reinforces his position as the leader within the Republican Party, and potentially, if predicted bet markets are to be believed, increases his chances of winning in November. Of course, we do still have nearly 4 full months to go, and as we learned yesterday, anything could happen.
Kaylee, I think we've got some live pictures here we can show as well of Trump's plane. We are waiting for him to deplane from that at the Milwaukee airport. But in the meantime, you mentioned, of course, how this changed the calculus for President Biden as well. How much do you think he's constrained by the events over the weekend? How can he really push forward, do you think, without seeming insensitive, given just on Friday he was pledging to shine a spotlight on Trump?
Well, he is going to have to, given that he is speaking from the Oval Office, speak as president, not speak as a candidate who is running against Donald Trump. His tone is likely to be somber. He is likely to focus on messages of unity, to condemn the violence that we saw on Saturday in the United States, to say that there is no place for political violence in the U.S. But it also is worth considering not just what he will say this evening, but how his message may have to change going forward, as Joe Biden, throughout the course of his campaign, has been casting Donald Trump as dangerous, as being a threat to democracy. But it was in the course of the usual democratic process, being a presidential candidate, attending a campaign rally, that Donald Trump himself was threatened. And so that is going to be a much more difficult needle to thread. The path here is going to be challenging for Joe Biden to speak with sympathy for Donald Trump, not just for him, but for those who also were victims in this shooting over the weekend. As someone died, 2 others were critically injured, to express that empathy, condemn the violence, and also still have to paint a contrast with him as a candidate. And we'll see how the president does that less than an hour from now.
Bloomberg Balance of Power co-anchor Kaylee Lines there joining us from Milwaukee. Let's actually get more with Lisa Camooso-Miller, a partner at Reset Public Affairs. She's a former communications director for the Republican National Convention and also held communication roles with the Commerce Secretary and the House Speaker. Thank you so much for joining us, Lisa. We were discussing this political environment in the U.S., and I just want to throw this question at you. Will this moment in history, the shooting of Donald Trump, be a unifying or a dividing moment?
Oh, Shery, I'm so glad you asked that question. I actually really see this as an optimistic and a positive opportunity. I'm glad that that the former president was not injured. I'm sad to know that there were folks in the crowd that were, in fact, injured. In fact, there was one that was lost. But what I'd like to say, just from all of the dialogue, from both sides of the aisle, from all of the different networks, from everyone here in the United States, we're really hearing a call for unity and a call to turn down the temperature, as Kaylee said just before. And that, I think, alone very well could be very interesting. It is going to cause the Republican National Convention to have a more conciliatory tone, to have a more patriotic and hopeful tone this week in order to bring that temperature down. And so I think that those of us who find or try to find sort of bright lights in moments like this that otherwise are very frightening for a democratic society, I'd like to think that perhaps this is an opportunity and a pivotal moment for one here in the United States.
You can see the moment where President Trump was shot there on stage in Pennsylvania. He was taken off that stage yelling, "Fight, fight, fight." And of course, this is a president when during his tenure, we also had the violence in Capitol Hill. So given his tendencies, what can we expect to come out of the Republican Party, especially as President Biden also needs to readjust his strategy and rhetoric here?
Well, I mean, that's absolutely true. I think it is going to force the tone to really come down. The Republicans in general have taken a very different tack this time around as opposed to they did in 2000. This has really been a much more measured and thoughtful campaign, one where the president has surrounded himself by some really smart strategists here in the United States. It's also, this incident just yesterday has caused the sitting president, Joe Biden, in order to recalculate and reconfigure his own travel schedule because he too also has to be more careful and more thoughtful in his political campaigning. And so that alone, I think, at the very least, 4 months before the U.S. elections are set to occur, that happening here very well could take the temperature down just enough for those of us to really sort of break through and have conversations about real issues that matter here. And that's the way that I'm looking at this, in a very hopeful way.
We've already seen Bill Ackman coming out endorsing Trump for president. Of course, we got the rhetoric also from Elon Musk as well. Could we see a potential Republican sweep after this?
I mean, it's hard to say, Shery. There's so many issues here in the United States that are really sort of making it difficult for Republicans to have a big sweep on Election Day. But I also think, though, that just because of this incident alone, this very well could galvanize people that ordinarily would not have stood behind the former president, even more so because he did have a very patriotic and a very brave reaction to what happened yesterday here in Pennsylvania. And also, too, it's one of those times when we in the U.S. need to really sort of figure out what it is the issues are that really matter. Is it discussions about women's health and women's access to health? The abortion issue here continues to be one that continues to make it harder for the Republicans to sweep in the elections. But if we start to talk about bipartisanship, if we start to talk about a more conciliatory tone and one where Republicans can really sort of find a way to thread the needle and be more inclusive, that's, I think, something we need to watch. And just this morning, we heard that former Governor Nikki Haley is now going to speak at the Republican National Convention. So that alone is an indication that the tenor is going to change.
Do you think, though, that this event over the weekend is what possibly leads to Trump being reinstated in the White House after the vote? Do you think this
Annabelle,
clinches his nomination?
Yes, I certainly do. Although 2 weeks ago, when we watched Joe Biden in the debate night, that alone was one that had me believing that it had already been finished, that the election was over. But to me, this actually feels like it's even more wind in the sails going into the Republican National Convention for Donald Trump to be restored as president. And that alone, to me, really indicates that this is very much a glide path for him at this point. Now, that could all change if, in fact, the sitting president decides that he has decided to step aside and give either Kamala Harris, our vice president, an opportunity to run as an incumbent, or someone else to get the top of the ticket as it comes to the Democratic National Convention, which is coming up in just a couple of weeks.
Your point on this being a unifying moment for the United States, why exactly do you say that when we've seen, for instance, even the FBI saying that violent political rhetoric is ticking up? Even if you have candidates that dial back the rhetoric, it doesn't stop the actions of everyday citizens.
No, you're absolutely right, Annabelle, and I'm glad you brought that up. That is definitely something we've been seeing here in the U.S. for many, many years now. In fact, our majority leader himself was also shot not long ago, maybe 6 or 7 years ago now, by a random shooter as well. So these kinds of things, this rhetoric in the United States is so incredibly high and so incredibly intense that it will be difficult to sort of turn that back. I do think that there's an opportunity here for both sides to come together and really sort of strike a balance.
Very quickly, Lisa, if this election is even more tilted towards Donald Trump at this point, is there anything that the Democrats can do in order to change strategy here? What would be the number one concern for Republicans that Democrats could pull off until the election? Just quickly.
Yeah, Shery, I think that's the one wild card that really exists still on the Democratic side is whether or not Joe Biden decides to seek the nomination and decides to be the top of the ticket. There's been a lot of questions about his age and whether or not he's capable to be president for 4 more years. And so if the ticket changes, that definitely changes the atmosphere and the opportunity for someone on the Democratic side perhaps to cede the nomination and also take back the White House.
Lisa, that was Lisa Camooso Miller, their partner at Reset Public Affairs and former Republican National Committee Communications Director. Thanks very much for your insights this evening. We'll have more ahead on the Asia trade. This is Bloomberg. You're watching the Asia trade, taking a look at how currencies are faring this morning. We've got traders perhaps bracing for heightened volatility given the events over the weekend. Former President Donald Trump's attempted assassination. his chances of winning in the White House, perhaps those have even gone up further. And off the back of that, you are seeing a bit of reaction coming through in terms of slight dollar strength and then how that impacts the calculus around expectations for higher tariffs. And again, that's a negative for the likes of the Mexican peso, the offshore yuan. But let's get more on this now, the calculus between Washington and Beijing in particular. Joining us is Jude Blanchette, Freeman Chair in China Studies at the Center for Strategic and International Studies. And Jude, thanks so much for joining us this evening. As we said just now in the ad break, we were already looking at a strong possibility or a possibility of a Trump election. This perhaps solidifies it. But what's the thinking on that, do you think, from Beijing?
Well, you wouldn't trade places with the people briefing Xi Jinping on U.S. politics right now. I think this has been a bewildering time for them to try to make sense of the race. I think it's been clear over the past couple of weeks that Beijing has been tilting its assessment in favor of Trump winning the presidency. I think they're likely listening to the discourse coming out of the United States over the past 24, 48 hours. And I think we all seem to think this further moves the needle in Trump's favor. So I think this just solidifies where Beijing probably already was.
Is Trump the lesser preferred candidate, do you think, for China, given that the Biden White House as well, that competition strategy has been quite effective economically, diplomatically as well?
It's hard to answer that question without sounding like you're putting your finger on the scale politically one way or the other. I will just say analytically, I think Beijing sees downsides in both directions. I think their view is Biden has been tougher than they thought, especially in the allies and partners domain. But look, they also think Trump is going to bring an enormous amount of headaches in a short amount of time. And Beijing and the Communist Party are fundamentally fairly conservative institutions. So I don't think they see a great choice either way. But I do think with Trump, they see a lot of volatility coming in the first, 1, 3, 6, 8, 12 months.
Headings that include a potential 60% tariff on Chinese goods as pledged by Donald Trump earlier this year during his campaign. So what are the implications of more trade tariffs at this point? I mean, President Biden didn't necessarily get rid of the tariffs that President Trump imposed during his first term.
Yeah, but Biden, of course, was fairly grudging on the tariff issue, and it took him really until this year to try to embrace them as a part of China's strategy, whereas Trump, especially under, his former USTR, U.S. Trade Representative Robert Lighthizer, who's likely to play a very significant role, tariffs will be front and center. I think we can question whether or not they'll bring a 60% across the board tariff. But if it's not 60%, I think the idea is it's going to be pretty sizable. And again, I would just say for listeners, if we do see a trade war come early in the Trump administration, I think this would not, for Beijing, just indicate a trade war. We would now be in a pretty all-encompassing deterioration of the relationship across the board.
Despite the risk of tariff, Jude, is there a way that this could also be beneficial for Beijing, given that, of course, we saw in the Biden administration how strategic the administration was in really pushing against Beijing, using its allies, strategizing in the broader scheme of things? We didn't necessarily see that during the Trump administration. Could this be a plus for Beijing if we got another Trump White House?
Yeah, again, this is where I feel like it's hard to answer this question without sounding political. I would say yes, certainly a Trump administration would take its foot off the gas pedal of something that Beijing has found extraordinarily challenging, which is the allies and partners component of the Biden strategy. You've seen Xi Jinping in one of the rare instances of where he name-checked the United States, vent frustration about this, what he calls an encirclement strategy by the United States. And what he means by that is AUKUS, Quad, all of the mini-lateral security arrangements that the Biden administration has promoted. So certainly Beijing would prefer to see those go away. But on the other hand, Beijing doesn't want to deal with a president who is unpredictable, who is going to bring significant economic punitive measures, who's going to really lean into decoupling. So I think there's no great choice for Beijing. But I do think Trump brings uncertainty, which the Communist Party does not like above all.
And there is that need perhaps for Beijing as well to focus on more self-sufficiency, building out its capabilities in strategic areas like chips, for instance. How do you think then, given the timing of this is quite exceptional, we've got this week the third plenum also kicking off, how does that also shape the policy direction we get?
Yeah, I think this very much is in the winds are blowing in one direction. And the real crux of economic policy in Beijing over the past 4 or 5 years has been, as you just mentioned, around this idea of technological self-sufficiency, partly because they see this as the way that they're going to, move China's economic development model into a future-oriented position. But it's also because they see self-sufficiency and technological self-sufficiency as the way they're going to navigate around what they see as this technological containment strategy coming from the United States. And I would imagine Beijing sees the reason for doubling down on self-sufficiency as just growing with the prospect of a Trump administration coming.
How do you assess the Chinese economy at this point? I mean, we've been talking extensively about the property slump. Is anything getting better, and could they be in a stronger position come the new administration in the U.S.?
No, I mean, I think the Chinese economy has certainly improved since we saw in, let's say, Q3, Q4 last year. I think one of the reasons we're seeing the plenum now, after having been delayed from when we expected to see it last fall, was because they wanted to wait for the economic numbers to improve. But as you indicated, the property sector is still in a massive correction. I would say, though, it's pretty clear that the leadership in Beijing is not overly concerned about the state of the economy. I think Xi Jinping's view is we need to accept a property market correction, and that will take some pain. I think they're also comfortable with some of the challenges that local governments are enduring right now in terms of their fiscal position. So I don't think Beijing is overly concerned about this. And Xi Jinping, having been in power, 11 years now, his view is I'm the one who's going to bring substantive changes to our development model, and that's going to take a little bit of pain and a little bit of time. And so my expectation is coming out of this third plenum, we're not going to see market reforms. We're not going to see signals of massive tax reform. What we're going to see is essentially a doubling down of Xi Jinping's view of industrial policy, state guidance to move the Chinese economy towards this direction of technologically enabled manufacturing capacity that can help ease productivity challenges. There's going to be a lot of state in it, maybe a few nods to the market, but this is really a totally new era we're in under Xi Jinping.
Jude, Blanchette, always good to have you with us. He's the Freeman Chair in China Studies at the Center for Strategic and International Studies. We have more ahead on the Asia trade. This is Bloomberg. First, market reactions to the shooting of Donald Trump in the currency space. Broad weakness across Asian currencies. Of course, we're seeing a little bit more strength in the U.S. dollar, perhaps safe haven demand, but also we could see more gains if we see loose fiscal policy, keeping bond yields elevated during a potential Trump presidency. On the other side of that, trade not surprising losses for the offshore yuan and the Japanese yen. This is Bloomberg.
No place in America for this kind of violence. It's sick. It's sick. It's one of the reasons why we have to unite this country. We cannot allow for this to be happening. We cannot be like this. We cannot condone this. The bottom line is that the Trump rally was a rally that he should have been able to be conducted peacefully and without any problem. But the idea that there's political violence or violence in America like this is just unheard of.
President Biden condemning the attempted assassination of former President Donald Trump. And of course, Annabelle, we have seen the market reaction, also the world reaction, leaders reacting to the shooting of Donald Trump. Here in Japan, we heard from Kishida, the prime minister, saying that they must stand firm against any form of violence that challenges democracy. I pray for former President Trump's speedy recovery. Of course, here in Japan, we have already seen political violence with the assassination recently of former Prime Minister Shinzo Abe. We also saw the reaction coming from China. China is following the shooting incident at the campaign rally of former U.S. President Trump. President Xi Jinping has expressed sympathies to the former president. Bell, and of course, we also have reaction from business leaders.
Yeah, that's right, Shery. We've seen actually people even coming off the sidelines because you had the likes of Elon Musk, for instance, Bill Ackman, both coming in to publicly support Donald Trump with the 2024 election bid. Jamie Dimon, another one, saying that everyone needs to stand firmly together. But Elon Musk saying he fully endorses President Trump, hopes for his rapid recovery as well. This is something that could really end up even swaying the undecided voters, Shery. So something that people are calling a very consequential moment for the entire race.
Yeah, especially given the markets had already been hedging a potential Trump White House. But take a look at morning calls ahead of the Asia trading day, because we now have calls from Capital.com seeing clients flows into Bitcoin and gold after the Trump rally attack. Senior financial market analyst Clarida says that markets are leaning into haven trades, even if they're more skewed towards non-traditional havens. Rhoda adds that the assassination attempt marks a changing point in American political norms. Now, Bank SYZ says a possible landslide victory for Trump in November could be a positive for risk assets. Their chief investment officer, Charles Henry Monshaw, explains that such an outcome could reduce uncertainty. He also expects a Trump win to put upward pressure on bond yields and cause the yield curve to steepen.
Well, Shery, let's get more on how markets are reacting this morning, bringing Garfield Reynolds, who leads our Markets Live Asia team. And Garfield, the moves that we're seeing, perhaps a little bit of strength in the dollar, a little bit of weakness coming through in some of the emerging markets, FX at least, Bitcoin a bit high. But how long do you think that reaction persists?
Well, Annabelle, I think, especially as far as dollar strength goes, I don't know if that reaction is going to last significantly past we have later on today in the US, I believe Powell is speaking in an interview, and we've got a week that's full of Fed speak, but not a lot in the way of economic data. That's taking place against the background of an economic picture that turned very noticeably in favor of Fed rate cuts towards weaker inflation and a weaker economy. So if Powell endorses that shift in the outlook, the economic outlook, that is going to make it hard for those dollar positive trades to extend seriously, especially in developed markets. I think we've also got a little bit of noise because we had the apparent intervention from Japan last week to prop up the yen. That meant the dollar was moving down in general against its major peers, but that down move accelerated very rapidly because of that perceived intervention. So you could say the dollar was due for a little bit of a bounce, looking at the fundamental trading patterns, but the overall picture should be for dollar weakness. And considering that, even if you want to say that increased odds for President Trump for another presidential term for Donald Trump would mean a stronger dollar, all things being equal, a lot of that was priced in after the debate favored Trump so strongly, and the all things being equal part of it is very important too. We might see the US dollar stronger than it would otherwise have been in the coming weeks and months, but that's still going to be a weaker dollar unless something drastic changes in the economic picture, and we see yet again rate cuts being delayed when the market has become certain that they are coming as soon as September and that there will be several of them by the end of the year.
I know we're still 4 months out from the presidential election in the U.S., but I wonder how much more challenging it becomes for Asian economies, Asian markets to price in another potential Trump White House, given that, of course, we're talking about a stronger U.S. dollar potentially coming from a Trump presidency. That will put more pressure on, as you said, even after the Japanese potential intervention last week, that we could see more weakness on not only the Japanese yen, on the Chinese yuan, and considering that also President Trump doesn't like it when these countries can sell more and their exports become cheaper, it could get really tricky for these leaders in Asian economies.
Yeah, well, it's already been a difficult few years precisely because of the policy response from the Fed to extreme inflation, and we now have this difficult combination, as you say, of we've got fundamentals arguing for a weaker dollar. You could sort of argue that Donald Trump would probably prefer a weaker dollar. At least some of the strong dollar impacts are not ones that he favors. Increased competitiveness for exporters to the U.S. So you have countervailing tendencies there. I do think, though, that as far as Asian economies go, it kind of just ends up being a bit of a wash. I do think the dollar's strongest days are likely behind it until and unless either the U.S. economy becomes very, very resilient again, or the more dire scenario, if we were to get a U.S. economic breakdown, then the dollar becomes a haven. But for now, a lot of leaders, of course, will be very focused on their concern about the political scope of this. From the economic side of things, I'm not sure it seriously moves the needle in that before this attack, the consensus was growing that Donald Trump was very likely to win re-election. He was ahead in some polls. He was certainly ahead in the betting markets after the debate and what that had brought. So a Trump presidency was already on Asian economies' radar and on the markets' radar. So the overall picture hasn't shifted a lot, even if in the short term there's a little bit more volatility and more uncertainty.
That was Garfield Reynolds there, who leads the Markets Live Asia team. And of course, one of the countries most closely watching those events over the weekend is China, given we've got the third plenum also getting underway today. That's the twice-a-decade meeting that has on occasion marked some pretty pivotal shifts. But it comes across the backdrop, of course, of economic numbers that are due, because we've got second quarter GDP, June activity figures as well due out later this morning. So let's get a preview now with our China correspondent Min Min Lo joining us in Hong Kong. And Min Min, as we said, that meeting kicking off against what could be a pretty sluggish backdrop.
That's right. Well, growth is expected to grow by 5.1% in the second quarter, slowing down from 5.3% in the first quarter. We did see an upward revision of that forecast over the weekend after that stronger than expected trade numbers that came out on Friday. But despite that upward revision, if you look at activity data, all of that is pointing down from the previous month as well. And looking ahead into the second quarter, we're expecting growth to slow down even further because of potentially escalating trade tensions, especially if Trump wins, and that could impose 60% tariffs on Chinese goods, which would hit exports, which is the only bright spot in the Chinese economy right now. We still have that very uneven economic growth with lackluster domestic demand. Property investments, as you see on that screen, expected to continue decline despite the PBOC rolling out that rescue package in May. So still strong calls for the government to roll out more stimulus. But at the same time, because China's growth is expected to be on track for that 5% growth target. So we're quite pessimistic that the government will roll out the kind of stimulus that markets are really looking for.
And of course, out of really any asset, or one of the assets that's most reflected that pessimism, has been the Chinese yuan, and that incredible weakness that we've seen that's really constrained the moves of the PBOC as well.
That's right. So they are due to announce the MLF rate today, and we're expecting them to hold that steady at 2.5%, which is what they have been, has been the rate since August of last year. And that's because, as you said, the PBOC has really signaled that they really need to prioritize this exchange rate stability, and for good reason as well, because we saw that trade surplus hitting the highest since 1990. So a further devaluation of the yuan could lead to even stronger trade tensions, outflow of RMB perhaps impeding that RMB globalization as well. And also on Friday, we had those credit numbers coming in looking very weak. Credit growth, money supply growth at the lowest on record. So liquidity is not perhaps the big issue in the market right now. We expect the PBOC to cut the RRR in the third quarter, and they could also still inject liquidity with the shorter end interest rates. They've signaled that they will be conducting more open market operations to tighten the interest rate corridor. So those things are what we'll be looking out for.
Bloomberg's China correspondent Min Min Lo there, and you can actually get more on the Bloomberg on China's key economic data releases. Go to TLI Vigo to get commentary and analysis from Bloomberg's expert editors. Now, here's another story that we're following at the moment. Canada's finance minister will hold talks with business and labor groups about adding trade barriers against Chinese-made vehicles and potentially beyond. Chrystia Freeland told Bloomberg that Canada has no choice but to view its trading relationships through a national security lens. The Canadian government has been closely watching the U.S. moves to impose higher tariffs against Chinese EVs and other products. More ahead on the Asia trade. This is Bloomberg. Take a look at how the Japanese currency is trading at the moment. We're seeing downside pressure against the U.S. dollar. We're seeing a little bit of a boost on the dollar after its worst two-week slide of the year. Of course, perhaps a little bit of safe haven demand given the shooting of Donald Trump, but also expectations that potentially it could continue advancing if we do see loose fiscal policy, keeping bond yields elevated in the U.S. On the other side of the trade, the yen is just weakening after that surge last week. Of course, we had speculation of potential FX intervention by authorities after the U.S. CPI numbers came in pretty benign. At the moment, those gains are not being held in the early Asian session. Japanese stock markets away on holidays, but there's this one company that we'll continue to keep an eye on throughout the week, Panasonic. Its CEO says the company's managers need to embrace a sense of crisis over low profitability. Lackluster profits have weighed on Panasonic shares that you can see right there are down about 4% year to date. Yuki Kusumi told us exclusively which business segments can drive growth in the future.
In terms of growth, we have identified automotive batteries and air conditioning, especially air-to-water in Europe, as growth areas, as well as Blue Yonder's supply chain management and software solutions. This is because of external factors, such as the slowdown in the spread of EVs and a changing situation of subsidies for air-to-water in Europe, for example, although growth has not been as initially planned. However, in the mid to long term, these three areas will continue to show growth, and we intend to become a leader by firmly establishing our competitiveness.
You have talked about that sense of urgency and instilling that throughout your company. What are you seeing in terms of some of those sectors and segments of your business living up to your expectations, and what happens if they underperform?
In terms of a sense of crisis, we have not fulfilled our commitments and improved our earnings. As a result, the group as a whole has not achieved the level of profit that meets the expectations of investors. This has led to a slump in the stock price and has also led to the price-to-book ratio falling below 1. I would like to emphasize that all of our management team must recognize that this is a critical situation, and we must manage our businesses accordingly.
The EV battery business has been a focus for you, but that's been really affected by external demand, right? When are you expecting to see a turnaround, and do you see any positive signals coming from your strategic partner, Tesla?
When we start supplying batteries to, for example, Mazda and Subaru, our plant in Japan will be in full operation, as well as in the US. We will continue to expand our business in the US, and we will follow the demand of US automakers and invest according to the growth of that demand. So in that sense, we will make our investments in such a way that the plants will not be forced to stop operating.
What can you tell us then about, say, the U.S. demand outlook, especially because you've been doing pretty well in your business there, but it's also because of the Inflation Reduction Act, right? And I wonder, what are your calculations of what happens after the presidential elections if the incentives are taken away?
I have heard that the IRA will not disappear immediately if Trump becomes president because of the way the US legal system works. This means that it will take a few more years. The spread of EVs is expected to slow down, not only because of the IRA, but also because the charging infrastructure is not yet sufficient. And I think there are other reasons as well. One reason is that EVs are expensive, even with the IRA. And as these issues are resolved, the spread of EVs is expected to increase in the long term. We will invest accordingly and will manage our business in such a way that the speed of EV adoption will not directly affect our business condition.
Are you expecting to see more price competition, though, in the EV battery market, especially from the likes of giants like China CATL, for example? Will you need to readjust your cost structure?
There are different types of batteries that can be used in cars that prioritize price and sacrifice some performance, and those that thoroughly pursue performance and safety. Although there is price competition, we will continue to supply equipment and vehicle makers that recognize the quality of our batteries.
Given that a big chunk of your revenue also comes domestically from Japan, what's the impact of a weak Japanese yen?
In our business, there are some units that are positively affected by the yen's depreciation, and some that are negatively affected. If you look at the total, for example, last year, after adjustment, operating income was positive by about 21 billion yen. However, if we look at how this affects Japan as a whole, export industries such as the automobile industry, for example, are very positive. As for how domestic consumption is faring, although some stores are being enriched by the increasing number of foreign customers and tourists, the price of goods sold are also rising, even with wage hikes and other such factors. And so the domestic consumers are not so happy.
That was the Panasonic CEO Yuki Kusumi speaking exclusively to Shery there. And you can catch Japan Ahead every Monday at 8:40 a.m. if you're watching in Tokyo. That's 7:40 p.m. Sunday in New York. And subscribers can watch live on the terminal using the TV Go function. We'll have more ahead. This is Bloomberg. You're watching the Asia trade, and this morning we're seeing a bout of dollar buying really coming across the board here. It does follow the attempted assassination of Donald Trump over the weekend, and you are seeing that greenback strength off the back of that buying of the world's reserve currency. So snapping a three-day losing streak, traders really weighing the chance of the former U.S. president winning the election. Those odds, Shery, appear to have increased.
Yeah, and with this backdrop, we are expecting President Biden to deliver an address from the Oval Office in a few minutes. Bloomberg Balance of Power co-anchor Joe Matthew joins us now from Milwaukee, where the Republican National Convention is being held this week. Joe, great to have you with us. How much is at stake here for the president, not only because he has to deliver that message of unity for his country, but also of how much this shooting complicates his presidential bid?
Well, you're asking great questions, and we don't have a lot of answers right now as we try to learn more about what happened yesterday, about what form this Republican convention is going to take this week, with a lot of changes in the air right now, from overall messaging to actual speech writing. Joe Biden has a big job tonight. This is a venue, the Oval Office, that has not been used extensively in his presidential career. Only 2 or 3 primetime addresses to the nation, most recently on the supplemental budget request for Ukraine, Israel, and Taiwan. So he finds himself in a precarious moment, having had a conversation about his age and whether he was even fit to do the job of being president only days ago, to now calling on the nation to unite following this attempted assassination. He will call for unity. There are questions about where he goes from here. However, he's supposed to be doing an important interview tomorrow with Lester Holt at NBC News, and it's going to be a much different challenge for Joe Biden to criticize Donald Trump after what we saw yesterday.
Yeah, and we know as well, just some lines dropping, that Biden will get an updated briefing from Homeland Security at 11 a.m. But you mentioned, of course, the balancing act for President Biden right now. Do you think that the window has closed for party members that were calling for his replacement? If you did see a new candidate, it just risks further adding to the chaos.
Well, it would add to the chaos, but that window has not closed. And once we get through this Republican National Convention this week, the focus may well shift back to Joe Biden's age. Let's keep in mind that the DNC, the Democratic National Convention, is set to take place in the middle of August. And there's been talk about the Democratic National Committee, the party, even moving up the nominating process for Joe Biden to this month in July, just so they could lock it down. But that is not a conversation that's being shared throughout Democrats in Washington. And we still have 19 members of Congress, Democrats, calling on Joe Biden to step down. So this is very much a work in progress. We'll have the speech tonight. We'll have the interview tomorrow. Then we'll turn our attention to the RNC, and that might buy Joe Biden and Democrats the better part of a week before they pick their next move here, with so much conversation about whether Kamala Harris could carry the mantle in Joe Biden's stead. But I'll remind you as well, we expect news on Donald Trump's running mate in the next 24 hours. That, too, will have a resonating effect on this presidential campaign.
Yeah, and as we said, Joe, that speech from President Biden due in just about 5 minutes from now. We'll have you back on to discuss the reaction to that. That was our Bloomberg Balance of Power co-anchor there, Joe Matthew in Milwaukee. A quick check as well on how crypto assets are reacting, moving higher, with Donald Trump being seen more pro-crypto than his peers.
This is the Asia Trade. We're counting down to Asia's major market opens, and the first reaction from investors, Bell, when it comes to the shooting of Donald Trump over the weekend in Pennsylvania. We're seeing the U.S. dollar slightly higher, of course, a little bit of perhaps safe haven demand, but at the same time, potential repricing of fiscal policy and the Fed rate path from here.
Yeah, that's right. Also, that prospect of higher tariffs certainly playing into the equation. You're seeing the likes of the Mexican peso, the offshore Chinese yuan a little bit weaker today. But really, it is that reaction we're getting to that shooting over the weekend, coming not only across the U.S. political spectrum, world leaders, Silicon Valley as well, Shery.
We're awaiting President Biden's speech at the Oval Office, the expectation for him to send a message of unity. As we see now the market opening here across Asia, of course, Japan is away on holidays, but what we're watching is the Japanese yen and that weakness against the U.S. dollar after the rally that we saw last week. Of course, broader greenback strength is being played in, but this is really a wild card for the session today, given that we are expecting thinner trading for this early Asia Monday session. The Kospi also coming online. We had seen a little bit of unwinding when it comes to those chip makers and those huge gains that we saw in the previous session. We're seeing gains at the open, Bell.
Yeah, Shery, and as we said, it is that countdown to President Biden delivering an address to the nation shortly. It is a primetime address, of course, and really that focus on his messaging and the sorts of remarks that he's expected to deliver here, expected to be forceful. We have seen a lot of bipartisan support really coming out and encouraging Americans to unite against political violence, even though you've got polling and even the FBI saying that we should see an uptick in political violence at the same time, Shery.
We continue to watch the Aussie Open as well as the Aussie dollar, which is under pressure after 5 weeks of gains against the U.S. dollar. And that is key, right? Because that's a trade-sensitive market, a tariff-sensitive market. And, of course, we're watching the developments around the China-U.S. relationship on a potential Trump White House. And that address that we're going to get from President Biden, very important. Let's go directly to the venue at the Oval Office.
Let's agree. We are not enemies. We're neighbors. We're friends. Co-workers, citizens, and most importantly, we're fellow Americans. We must stand together. Yesterday's shooting at Donald Trump's rally in Pennsylvania calls on all of us to take a step back, take stock of where we are, how we go forward from here. Thankfully, former Trump is not seriously injured. I spoke with him last night. I'm grateful. He's doing well, and Jill and I keep him and his family in our prayers. We also extend our deepest condolences to the family of the victims who was killed. Corey was a husband, a father, a volunteer firefighter, a hero, sheltering his family from those bullets. We should all hold his family and all those injured in our prayers. Earlier today, I spoke about an ongoing investigation. We do not know the motive of the shooter yet. We don't know his opinions or affiliations. We don't know whether he had help or support, or if he communicated with anyone else. Law enforcement professionals, as I speak, are investigating those questions. Tonight, I want to speak to what we do know. A former president was shot, an American citizen killed, while simply exercising his freedom to support the candidate of his choosing. We cannot, we must not go down this road in America. We've traveled before throughout our history. Violence has never been the answer. Whether it's with members of Congress of both parties being targeted and shot, or a violent mob attacking the Capitol on January 6th, or a brutal attack on the spouse of former Speaker of the House, Nancy Pelosi, or information and intimidation on election officials, or the kidnapping plot against the sitting governor, or an attempted assassination on Donald Trump. There is no place in America for this kind of violence, or for any violence ever. Period. No exceptions. We can't allow this violence to be normalized. You know, the political record in this country has gotten very heated. It's time to cool it down. We all have a responsibility to do that. Yes, we have deeply felt strong disagreements. The stakes in this election are enormously high. I've said it many times that the choice in this election we make in this election is going to shape the future of America and the world for decades to come. I believe that with all my soul. I know that millions of my fellow Americans believe it as well. And some have a different view as to the direction our country should take. Disagreement is inevitable in American democracy. It's part of human nature. But politics must never be a literal battlefield, or God forbid, a killing field. I believe politics ought to be an arena for peaceful debate, to pursue justice, to make decisions guided by the Declaration of Independence and our Constitution. We stand for an America, not of extremism and fury, but of decency and grace. All of us now face the time of testing as the election approaches. And the higher the stakes, the more fervent the passions become. This places an added burden on each of us to ensure that no matter how strong our convictions, we must never descend into violence. The Republican convention will start tomorrow. I have no doubt they'll criticize my record and offer their own vision for this country. I'll be traveling this week making the case for our record and the vision, my vision of the country, our vision. I'll continue to speak out strongly for our democracy, stand up for our Constitution and the rule of law, to call for action at the ballot box, no violence on our streets. That's how democracy should work. We debate and disagree. We compare and contrast the character of the candidates, the records, the issues, the agenda, the vision for America. But in America, We resolve our differences at the battle box. You know, that's how we do it, at the battle box, not with bullets. The power to change America should always rest in the hands of the people, not in the hands of a would-be assassin. You know, the path forward through competing visions of the campaign should always be resolved peacefully, not through acts of violence. You know, we're blessed to live in the greatest country on earth, and I believe that with every soul, every power of my being. So tonight, I'm asking every American to recommit, to think about it. What's made America so special? Here in America, everyone must be treated with dignity and respect, and hate must have no safe harbor. Here in America, we need to get out of our silos, where we only listen to those with whom we agree, where misinformation is rampant, where foreign actors fan the flames of our division to shape the outcomes consistent with their interests, not ours. Let's remember, here in America, while unity is the most elusive of goals right now, nothing is more important for us now than standing together. We can do this. You know, from the beginning, our founders understood the power of passion. So they created a democracy that gave reason and balance a chance to prevail over brute force. That's the American we must be. An American democracy where arguments are made in good faith. An American democracy where the rule of law is respected. An American democracy where decency, dignity, fair play aren't just quaint notions, but living, breathing realities. We owe that to those who come before us, to those who gave their lives for this country. We owe that to ourselves. We owe it to our children and our grandchildren. Look, let's never lose sight of who we are. Let's remember we are the United States of America. There is nothing beyond our capacity when we do it together. God bless you all, and may God protect our troops.
You've just been listening to President Biden at the Oval Office talking about how violence has never been the answer, that they must resolve the differences at the ballot box and not with bullets. Let's bring back Bloomberg Balance of Power co-anchor Joe Matthew, who's joining us from Milwaukee, where the Republican National Convention is being held this week. Joe, we just heard the president sounding very reasonable, logical, really asking for unity and no further violence. How will this resonate with the American public?
Well, let's see. As we mentioned earlier, this is not a venue that Joe Biden has used very often, and he's typically not in Americans' living rooms at this hour in prime time here, at least on the East Coast in the United States. He said things very simply. He only spoke for about 7 minutes. And we do need to bring ourselves back to the facts. We don't actually have that many of them following what occurred yesterday in Pennsylvania, the attempted assassination of Donald Trump. Joe Biden just said, reminding us of the moment. A former president has been shot. An American citizen was killed. He invoked Nancy Pelosi's husband. He invoked Gretchen Whitmer, the governor of Michigan, the kidnapping plot that was foiled against her. January 6th, the composite of political violence that for some has been normalized in this country. And he said the political rhetoric has gotten very heated. We need to cool it down. Whether people listen to Joe Biden or not, that is a consistent message for him. And he says he'll be on the road this week as the Republican National Convention gets underway here in Milwaukee. And as Joe Biden just told Americans, they will surely be criticizing his record. The idea here is that we do so peacefully.
Exactly to your point, Joe, how do you tone down the rhetoric and the concerns? Because we're seeing people that are being polled that are actually expecting the reverse, that we could see further political violence ahead.
That's right. That's right. And this remains a distinct possibility. This is why we're trying very concertedly at Bloomberg to not be projecting or predicting. The fact of the matter is, we saw some very powerful images yesterday of Donald Trump, blood streaming down his face, his fist in the air. And before he left the stage, he said, fight, fight, fight. There are a lot of angry people in America right now, and there might be a sense that retribution, some sort of reaction should follow in this particular case. That is what the Secret Service and the FBI are trying right now to prevent. But the fact is, you're right. Our own polling has borne this out, that Americans are deeply concerned about political violence surrounding this campaign and surrounding the election itself in November. It will be incumbent upon both of these men, Joe Biden and Donald Trump, to lower the temperature and keep that from happening. One will not be able to do it alone.
And Joe, of course, you're in Milwaukee because of the Republican National Convention. How will the events over the weekend and what's transpired in the last 24 hours or so affect this gathering?
It's a great question. We have seen some hardening of the security perimeter. There's just an enormous level of security here, law enforcement, thousands of law enforcement from 40 different agencies. And there has been talk of expanding the perimeter a bit. The question we have is about messaging. Speeches are being rewritten right now. The program is being reset for what's a 4-day event culminating in the nomination and the nominating speech of Donald Trump on Thursday night. We have yet to learn who his running mate will be. That is something that will likely be told in the next 24 hours or so. But I'll be very curious to hear what calls for unity we hear from Donald Trump, any additions or subtractions from the speaker schedule, and what the rank and file think. There are 50,000 people here in Milwaukee to take part in this exercise. Many delegates have traveled from around the country to take part in this. And we like to think that it will resolve into a message of unity and positive action. We'll have 4 days to figure that out, and we'll have special coverage here from Milwaukee as we learn together on Bloomberg.
Joe, do you think that this is the moment that sort of galvanizes or forces the decision of independents or undecided voters?
Mm-hmm. It's a good question. Again, hard to tell. It was interesting to see the snap endorsements following the shooting yesterday from the likes of Elon Musk and Bill Ackman, and you wonder if that was representative of a certain demographic of Americans here, fence sitters, as you said, undecided voters. We also have something in this country called double haters. That's what the pollsters like to call them, who don't want any part of Joe Biden or Donald Trump. And I'll be very curious to see what happens to that number. That's about 10% that these two men are fighting over here. In critical swing states, only 6 or 7 of them that will decide this election. That is really how narrow this is. And when you have such powerful optics as we saw yesterday, following the potency of age and the questions of mental acuity surrounding Joe Biden, there is so much noise right now that it's very difficult to answer these questions. And that's why our coverage here in Milwaukee is going to be so important.
And of course, we still have about 4 months towards the U.S. election, and so many things could change during that time. Joe Matthew in Milwaukee, our Bloomberg Balance of Power co-anchor covering the Republican National Convention. And we're getting the first market reactions in the Asia trading session, mostly in the currency spaces. We're seeing a little bit of a boost for the U.S. greenback. But take a look at the open in the Kospi, Kosdaq in South Korea, because we're seeing the downside pressure on the Korean won already, a little bit of a mixed picture when it comes to the stock markets there. We had seen a little bit of unwinding of some of those bets when it came to the semiconductor wagers around South Korea. Of course, we had seen an immense rally in that sector as well. Local stocks fell in the previous session, and we're seeing the Korean won under pressure with the U.S. dollar pushing higher. But really, Annabelle, what I'll be watching is also how South Korean assets react to what's happening in China as well, because, of course, the Korean won very much following what the Chinese yuan does, not only because of the third plenum that is happening this week, but because of that risk-off sentiment in Chinese assets, given the potential of a Trump return to the White House.
Yeah, it really relates to that concern around high tariffs. And of course, you mentioned the third plenum that's kicking into gear today. We'll also have all of that economic data coming out, the monthly figures plus second quarter GDP. This is a state of play, though, for Aussie assets that are coming online this morning. So you're seeing actually stocks that are moving high here. We have seen, as you said, that dollar strength coming through in the Aussie just fractionally weaker. What else we're tracking, of course, are how US assets are faring this morning, not just the dollar story, but also any potential moves that we see around treasuries. Cash treasuries are closed today for a public holiday, or given the public holiday in Japan, but still we have seen the futures indicating that yields will rise when cash trading starts in the London hours instead. Given that we said the aftermath has increased the odds of President, or rather Donald Trump becoming president again, it does play in, as you said, Shery, to that support for looser fiscal policy and higher levies. But let's get more on the market reaction, bring in Garfield Reynolds, who leads the Markets Live Asia team. And Garfield, how do you view it? Because following what was considered quite a disastrous debate a couple of weeks back, we'd already seen the odds of Trump being elected being priced back in. How much further is there to go on that, even after the events of the weekend?
Well, some of that will depend on how the Republican National Convention plays out, the sort of impact that has. There's also one of the potential things that is occurring here is that what the reporting is showing from the Democrat side is that there's a significant lessening on the pressure on Joe Biden. So there's the potential that he is more likely to be Trump's opponent. So to some extent, if you read out of all that, a slight increase in Trump's odds of winning, a decrease in the odds that the Democrats end up with a chaotic situation as they move to replace their leader, that all makes it look like, from the market's point of view, the situation now is similar to the way it was a week and a half ago, only more firmly. So I think that means that we've had a modest move in the Trump trade direction, as flagged. The US dollar higher, especially against the Mexican peso, expectations that the yuan also will come under further pressure. Those sort of assets that are more directly impacted by the potential for another Trump presidency, in particular, the potential that Trump would also, that the Republicans would have strong gains in the House and Senate, and so that would increase the potency of a Trump presidency. But for developed market assets, for a lot of the major asset classes, this is just a small step further along a path that they had already been tracking.
We don't get cash trading in U.S. Treasuries, unfortunately, until the London session because Japan is away on holidays. But what does that mean for the yield curve, given all of what you just said? More potential trade tensions, looser fiscal policy, if we get another White House really dominated by President Trump?
Well, again, yields did respond to the debate, and those futures trading, that is signaling perhaps a little bit of upward pressure. Then again, Australian cash bonds are trading. They've moved in line with the Friday shift in US Treasuries, which was to see yields come down. And the fundamentals are pushing for lower yields. So even if the impact of the political occurrences in the US is a bias towards higher yields than there would otherwise have been, the very strong potential that the Federal Reserve will cut interest rates in September and then cut several times in the coming months, that's going to bring yields down across the curve. It's also likely to create a curve steepening as two-year yields fall faster. So, again, at the margin, it makes a difference. Slightly higher yields than we would otherwise have seen, perhaps a slightly higher curve. But for now, the picture is not hugely different for Treasuries than it was before the weekend.
Garfield Reynolds, who leads the Markets Live Asia team with the market assessment of a potential Trump White House. We have more ahead. This is Bloomberg.
checking in on how futures in Europe are coming online this morning. You're seeing pretty much broad weakness across the board. We have as well seen the euro trending a little bit lower this morning following that bout of strength in the greenback. Shery, given that traders are really reacting to the weekend shooting incident and how that also impacts the election odds for November.
We'll be waiting for the London Open as well in order to get the cash trading of treasuries. Of course, Japan away on holidays, but we're seeing the downside pressure. The treasury futures space, of course, is the repricing perhaps of fiscal policy that could offset the prospects of imminent Fed cuts. This is really the concern when it comes to the markets at this point. Let's bring in Richard Clarida, Global Economic Advisor at Pimco. He previously served as a vice chair at the Federal Reserve. Richard, great to have you with us. Thank you so much for your time on a very important day as we see the first market reactions to the shooting of Donald Trump over the weekend. Let me start by asking you the biggest question that investors probably have in their minds right now. Will a potential Trump presidency affect the Fed's rate cuts?
Well, first of all, we expect the Fed to start cutting in September. I think the data has moved in a direction, both in the labor market and in the inflation data. Well, I think we're actually hearing from Chair Powell today. We've heard a lot from Chair Powell, Centra, and up on the Hill, so we'll get more insight, and of course, a Fed meeting. But we do expect Fed rate cuts this fall, obviously during the Biden presidency. And then the course for policy under either a Biden or Trump presidency, I think, is going to depend on the data and the evolution of the economy.
You were vice chair during the Trump administration, and we saw, of course, a lot of pressure coming from the administration itself on the Federal Reserve.
Yeah.
How much influence does the president have on the Fed?
Well, the influence any president has on the Fed is through his ability to nominate individuals to be governors, vice chair, and chair. But a president can only nominate someone to the Fed if there's a vacancy, and there will be no vacancies on the Fed. At least none are scheduled to occur until May of 2026, when Jerome Powell's term is up. So over time, a president can nominate individuals, but they are subject to Senate confirmation. I can tell you, having gone through it, it's not a rubber stamp. The Senate takes the advice and consent very seriously. And so over time, the president can put appointees in if they get confirmed. But nothing happens on day one. The Fed on the first day of the next presidency is going to be the same Fed that we have right now.
Moving forward, because it's not just the rate cut that we could see this year, there's a few more that are priced in as well for next year. Do you see, though, the Fed being a little bit constrained if Donald Trump is re-elected and we do see higher tariffs and looser fiscal policy?
Well, again, there are certainly scenarios that would be inflationary, and the Fed's job is to maintain price stability. I would point out, during my time at the Fed, 2018 to 2022, there were tariffs put in place, and there were immigration restrictions, and inflation was actually relatively low, in fact, a little bit below 2%. So the details are going to be actually quite important, and I think it would be too soon to predict. But certainly there are scenarios where that could be an issue for the Fed, but I think it's just too soon to tell.
Yeah, how inflationary do you see those tariffs being, possibly? Because we've seen some assessments that it could add around $2,000, $2,500 to each household per year in the U.S. Is that significant in your view?
Well, again, the details matter. Again, I repeat, there were tariffs that were put in place between 2017 and 2021, and on balance, inflation was a little bit too low in that period. So again, the details will matter. Clearly, arithmetically, the tariff pushes up the price of the imported good. Depends upon if companies absorb it. Retaliation's also an issue. So the details will matter for sure.
How well is the Fed doing right now when it comes to reining in inflationary pressures?
Well, I think you have to give the Fed pretty high marks so far. They raised rates aggressively. They by their own account, they got a late start in March of 2022, 6 to 7 months maybe. But under Jay Powell's leadership, they pushed rates into restrictive territory. Inflation, which was 7% when they began to hike rates, is now running at about 2.5%. The most remarkable thing is that the labor market has adjusted, much as Governor Waller indicated, not through rising unemployment, but through firms cutting back on posting vacancies. And so, you know, we're not there yet. No one wants to declare mission accomplished, but certainly relative to where we were 2+ years ago, it's looking like a pretty successful disinflation.
Yeah, is the softer labor data that we got last week sort of a sign when it comes to... Is the softer labor data that we got last week then sort of a sign of potentially that we could see a soft landing for the U.S. economy? And at what time do you make that calculation and that assessment that we're in the safe zone?
Yeah. It's a great question. You know, what I would say right now is if you look at the consensus outlook of Wall Street economists, if you look at the Bloomberg ECFC screen, which I consult several times a day, it more or less, the baseline forecast looks like a pretty darn soft landing. Inflation coming down, the unemployment rate staying at roughly current levels. I think if anything, and Chair Powell mentioned this last week during his testimony, if anything right now, I think they're pretty attentive to the fact that if you strip out government employment and you look at sort of underlying private sector job gains, they have really slowed sharply this year. They're definitely running under 100,000, maybe 50,000. So a lot of the job gains we've seen have been in government employment and in sectors like healthcare and education, which have a lot of government support. And we've had a 0.7 rise in the unemployment rate. And so the labor market clearly, notwithstanding, you know, there's all this talk, oh, rate hikes have no effect on the economy. What's the Fed doing? Well, in fact, as we've known for 75 years, monetary policy operates with lags. And policy peaked a year ago, and I'm still in the camp that thinks we're going to continue to see some of the delayed effect of that. And I think the Fed's increasingly focused on that as well.
Yeah, to your point there around the differences that you see in the labour market and where those jobs are coming from, how concerned do we need to be then by the reports that the lower end of the consumer is looking a lot more constrained?
Well, that's an excellent point because, you know, I'm a macroeconomist, so macroeconomists oftentimes talk about per capita and average. But the reality is that consumers, especially those, you know, in the lower income levels of the distribution, don't have a lot of wealth. They don't have a lot of bank accounts. They got some stimulus support. They've spent that. We see credit card balances are being run up. Credit card delinquencies are moving up. And so in that segment, which is tens of millions of households, we're definitely seeing the effect of slowing income gains and rising interest rates. There's no doubt about it.
Richard, before we let you go, we continue to talk about a potential Trump White House, but I just want to ask you about what are the considerations for you when it comes to financial regulation? Of course, we know that the outlook has been very different for a potential Trump presidency as opposed to a Biden presidency.
Well, obviously, the Fed in partnership with the FDIC and the comptroller of the currency and the Treasury has an important responsibility, especially in regulating bank holding companies. Right now, as some of your viewers are aware, the Fed is in the process of rethinking its proposal to implement the Basel III recommendations. That I think the Fed's made clear that process is going to spill into 2025. And since that process is a process that also engages the Treasury, the comptroller of the currency, and the FDIC, then depending on the personnel in those other agencies, it could have an influence on where these regulations end up.
Yeah, certainly the question as well, how banks are preparing for those new capital rules. But that was Richard Clarida, their global economic advisor at Pimco. And we are heading through the morning session so far. Japan, of course, is shut for a public holiday for cash equities. But the Japanese yen is still trading. And the real overarching theme that we've got across the board today is the dollar strength that we're seeing. So it has been that bit of a flight to the greenback, given you've got it acting as a haven play, but also there's those expectations that Donald Trump, his election odds are now looking even more likely than even just following the debate and the aftermath from that. And that expectation, as we were just discussing, looser fiscal policy, higher tariffs, that all plays into the equation, particularly for the likes of the offshore yuan that you can see there just under pressure. But sticking with China, because we have as well seeing the country issuing a short statement offering President Xi Jinping sympathies to Donald Trump following the weekend's assassination attempt. But there's really been little else from Beijing except for state media articles criticising the deep divisions in US democracy. For more on that, and of course the countdown to China's third plenum that starts this morning, let's bring in our Chief North Asia correspondent Stephen Engel. And I guess that's the big question. Is this something that overshadows the third plenum, or does it change its course at all?
Well, it clearly adds another discussion point behind closed doors at the plenum, which does begin today and runs through Thursday. But really, you hit it on the head there when you said a short statement from Beijing. Okay, granted, it happened on the weekend, so there's not a lot of opportunity, especially at the afternoon briefing at the Ministry of Foreign Affairs, where journalists can ask them for Beijing's statement. But really, that statement was pretty terse. It was one line from Xinhua news agency saying that Xi Jinping essentially offered the sympathies to Donald Trump following the shooting, full stop. But again, state media took the opportunity. Global Times, for one, had a news article essentially saying that this shows that the U.S. democracy is in deep trouble. This is a news article, not an editorial, as the political divide widens. But in another editorial, as you can see on your screen here, essentially taking the opportunity to pick holes in U.S. democracy. Obviously, China has, for many, many, many years, cited the benefits of Chinese-style politics rather than diplomacy, rather than the diplomatic system of the United States, essentially saying this is showing significant pathological symptoms, this type of assassination attempt on Donald Trump. And going back to the last page, if you can, it also brings it back to the criticisms of China, essentially saying the future of U.S. democracy hinges on these internal challenges, what we saw, the political divide, but rather than focusing solely on external strategic competitors, essentially alluding, don't keep on blaming China for the ills in your society.
So then how does that thinking play into the expectations for the third plenum, given there is that focus on self-sufficiency?
Absolutely. Look, there's big debate going on behind those closed doors that will start today at the third plenum on how to conquer and to essentially tackle the geopolitical concerns, whether it's going to be Biden in the White House for another 4 years or it's going to be Donald Trump returning. And obviously there was an acrimonious relationship with Donald Trump with those trade wars that were launched by the Trump administration. So I think there's going to be new calculuses being discussed. But again, this is a very secretive meeting, the plenum, the third plenum, which China kind of charts longer-term priorities. We're not sure if we're going to get big bang economic policies, financial policies to tackle the growing headwinds in the Chinese economy, like the property troubles. But we are going to likely see some more reinforcement of new productive forces. What kind of monetary support will go towards that? What kind of fiscal support will go towards that? And again, it's really, now that Xi Jinping is leader in perpetuity, what are going to be his long-term strategies given whomever is in the White House? Now, again, keep in mind, this is not going to be the time or place for the next 5-year plan. That will come likely in the 5th plenum later this year. The most recent 14th 5-year plan came out in 2020. So again, this will be the precursor to that, and we'll be reading the tea leaves, obviously, if we get from that communique late Thursday or Friday morning.
Yes, certainly something we'll be watching very closely. But Steve, you'll be with us with all the details across the week as well. That was our Chief North Asia correspondent, Stephen Engel. Let's bring in Alicia Garcia-Herrero, Chief APAC Economist at Natixis. And I wanted to get your views because I think Steve just put it really nicely there. Behind closed doors, it's going to be that question of how China can tackle the geopolitical concerns. But what do you think their strategy can be from an economic perspective?
Well, I'm afraid that we'll have exactly what Stephen said, many more new production forces, i.e. industrial level policies, which basically aim at exporting China's way out. And that's a pity. And I actually think that Donald Trump's attempted assassination will only put even more effort on this self-reliance and on basically exporting China's way out without importing its way out, meaning without really relying on the rest of the world. So this is really not what China should be doing. We even had, voices in China, Tsinghua professor Dai Ke saying very clearly, China needs actually to subsidize consumers, not producers. We need more consumption. That's what China needs. But that's not what's going to happen, unfortunately. That it seems to me it's clearly going to be supply driven.
Alicia, are you making calculations at this point of what a Trump presidency could mean in terms of tariffs and the impact on the Chinese economy?
Well, I mean, we heard the tariffs and it can be pretty blunt, but let's bear in mind that the U.S. is no longer the largest export market for China. It's actually Europe. So a lot will depend on what others do as a consequence of Trump's decisions. Trump won't entice any interest because Trump is not looking for alliances anywhere, including Europe, to follow him in that regard. But the problem is countries might be forced to follow Trump because all of this excess capacity from China will actually flee or go into Europe or into the rest of the world. And that means that if the rest of the world becomes much more protectionism, that's where China has a problem. Let's not forget that the only number out there, and we're going to have second quarter GDP very soon, probably today, although, if we have a plenum, you never know. We saw that being delayed in the past. But basically, nothing grows above the magical 5% except exports. So you see, Trump will be painful for China. But the most painful part will be on technological transfer and scientific cooperation. That's where Trump was actually even more aggressive than Biden, especially on the scientific cooperation. That's where he made a difference. And I think that's going to be very painful.
Can you thread the needle then between those 2 points, that increase in protectionism that we could see? China's likely to set strategic priorities or policies that further increase or push its exporting-led economy. Those two really aren't in sync together.
Totally. That was exactly my point. I love your question because in a way, because of the likely victory of Trump, especially now, China feels threatened. So self-reliance, moving up the ladder, no technological dependence. That means more money on the industrial forces, whether it's for exports and hopefully finding somewhere else, that's the global south, or at least to reduce the dependence on the US, semiconductors, AI, you name it. But you're right, these two policies are inconsistent unless the rest of the world does not follow Trump. And that's a key question. And that's unlikely because they're going to feel the pinch even more because the US is not going to be there to absorb any of this surplus from China.
Then if the US isn't going to be willing to absorb that surplus, what sort of policies do you think we're likely to see within China to increase consumption? Because we haven't seen Chinese consumers that have been willing to spend either.
Well, as much as it would be logical to see these policies, and you could argue that, some kind of welfare state is needed, whether it's, higher pensions, maybe unemployment benefits, you name it. I doubt we're going to see them because all of these policies require fiscal space. And the main problem is China doesn't have fiscal space anymore. I mean, we see the local governments suffering. And by the way, all of these professors in China arguing that we need this consumption are also arguing that we need to reduce subsidies on the industrial front. You know, there's no money for everything. So you need to either subsidize production or subsidize consumption. So China needs to go really, 180 degrees away from that industrial policy model towards a consumption-based economy. And that's what I'm saying that I don't think is going to happen, because the industrial subsidies are not only there to export, they are there to export, but they're also there to move up the ladder, to reduce the dependence on the US, because they're very much innovation-driven. And that's why China is not doing this, because self-reliance remains the most important objective.
Alicia, is there anything that they can do on the monetary side of things, especially at a time when you have this constant pressure on the yuan and potentially just a stronger dollar?
Well, it's so unfortunate. Yeah, I mean, I have to say, this is true for the yen also. The minute we see very good inflation numbers in the US, good meaning lower, and hoping that the pressure will go away because the US might cut even in September, good news, both for China, for the RMB and the yen. Suddenly we have this attempted assassination and, the dollar is stronger and maybe for longer. So that's horrible news for the PBOC, because I don't think they're going to cut the MLF. We will have that news this week. And why? Because they just can't increase the interest rate differential because the RMB is already so weak. So how much room do they have other than by very targeted policies, maybe, forcing the banks to lend? By the way, it's not working. We just got loan data on Friday. It's terrible. The only is 2.2 trillion, and most of that loan growth comes from the government. Households are not borrowing, corporates are not borrowing. So, in a way, the PBOC is trapped because there's no demand for borrowing. There's no demand for loans, right. And the RMB is very weak. So for those two reasons, I think the room is really limited.
Yeah, very difficult situation for China. Alicia Garcia-Herrero of Natixis there with what to expect from the Chinese economy and the third plenum. Of course, as we continue to watch the market reaction with increased bets now that Donald Trump could retake the presidency. Some of those winners of the Trump trade are in focus, including Tesla. Of course, Elon Musk is a big backer of President Trump. We are seeing some of those in the supply chain, including South Korean defense, nuclear energy and healthcare firms, as well as Tesla suppliers gaining ground early in the Asia session. We have more ahead. This is Bloomberg.
In America, we resolve our differences at the battle box. That's how we do it, at the battle box, not with bullets. The power to change America should always rest in the hands of the people, not in the hands of would-be assassins.
President Biden speaking from the Oval Office earlier this hour after that shooting of Donald Trump over the weekend in Pennsylvania. We're seeing the U.S. dollar now gaining ground, safe haven demand, plus perhaps the expectation that we might see looser fiscal policy, higher bond yields, and of course support for the greenback. On the other side of the trade, you see the Japanese yen continuing to lose ground at the moment. And this, of course, after a rally that we saw last week. Yen traders were buffeted by a suspected intervention, but they have further speed bumps to navigate before the BOJ decision on the last day of the month. FX and rates reporter Michael Wilson joins us now for more. And Michael, despite the potential intervention that we saw last week, the gains on the yen still not being sustained.
Yeah, it's a bit of a problem for the authorities up in Tokyo, and I think they're probably keeping an eye on the reaction today. Japan's closed for a holiday, so liquidity might be an issue. And as we head into London, people want to build on their Trump trades, as it were, whether it's long dollar or steepeners in the bond market. But whatever it is, if they sell yen as a consequence to fund those trades, then if we got up near that 159.45, which was the high on the Friday before the rate checks came in by the Bank of Japan, if we get anywhere near that level at all, I think that they'll be very much, I won't say trigger happy, but they'll be leaning very much forward with the prospect of maybe jumping in again, because that's not the direction they want it to go. It's not really addressing fundamentals as they stand. It's more of a hype trade, and I don't think they want to be see the yen come off second best in that circumstance.
Michael, there's a few different cross currents as well for the yuan this morning. You've got, of course, the moves in the Japanese yen. You've got the daily fixing, for instance, coming up that could push back on that weakness we've seen in the offshore currency this morning. And you've also got the election odds for Donald Trump and what that means for the Chinese economy as a whole with higher tariffs. What's the direction for the Chinese currency, do you think, over the coming days with the third plenum as well getting into gear?
I think they'll try and keep it pretty steady just in the very short term, and a lot probably is riding on this third plenum, the outcomes of which, for the yuan and for the dollar. I mean, they could be offsetting. You could get a really strong response by Beijing authorities and stimulatory, good for yuan, and at the same time the Trump trades offset that. People are they like buying dollars for yuan, they like buying for yen, and if that narrative continues, well, any good work done on the stimulus front from a currency perspective will probably be offset. But overall, I think there is a further risk for further yuan weakness. As much for the yen too, unless this US data continues to weaken.
Yeah, actually, thinking of data, we've got the GDP figures and the monthly activity figures due for China this morning, something else that could change the calculus. But that was our FX and rates reporter, Michael Wilson, there. Not just about economic figures, of course, it's also a busy week ahead for global earnings. We're going to be watching for results from top names in the chip industry, including TSMC and ASML, as well as Indian tech giants Infosys and Wipro. US bank earnings continue as well, with Goldman Sachs, Morgan Stanley and Bank of America set to report. The first wave that we had with the results from Wall Street lenders disappointing. We saw Wells Fargo slumping, its worst earnings day drop in 3 years as net income interest missed estimates. Citigroup as well falling, with the concern there really around expenses. And even JP Morgan's steady guidance failed to impress investors. For more on bank earnings, let's bring in our finance editor, Adam Hay. And Adam, what do you think is really driving that? Because as we said, those earnings results so far, investors aren't that impressed. Is that also just a function of the run-up that we've seen in bank stocks this year?
I think, Annabelle, that is part of it. Certainly expectations were very high going into these numbers, but I think you're already starting to see a couple of themes coming out of this, even just after the first few of the banks reported at the end of last week. So the first of those is really this rebound that we're seeing in M&A activity and in debt capital markets activity, which is boosting those areas of the balance sheet for these banks. And we've really seen that, of course. There's been lots of quite large M&A transactions, but secondary M&A activity has been, somewhat more subdued. So there's still maybe some follow through to that if we continue to see this uptick, which we're broadly seeing in the deal space. And of course, on the DCM side with debt activity, Citigroup CFO was saying quite specifically that a lot of that debt needed to be rolled over during these few months. And indeed, you're seeing that in their numbers. So you have that certainly on the good side of the table. But then on the flip side, the second point is really that what you're seeing in the additional money being set aside for more souring loans that are tied to the consumer and some of the difficulties that the consumer is still facing in the US economy especially, but globally as well, given the uncertainty and the fragility around the economic landscape at the moment. I think really that's the key that, is maybe one of the reasons which is why you saw some weakness in the share prices. Looking ahead, I think that element of the consumer is still quite testing.
Yeah, the consumption picture very critical when it comes to the Bank of America earnings result this week as well. Not to mention that, of course, we do have Goldman Sachs as well as Morgan Stanley. What are some of the other metrics that you'll be watching, Adam?
Well, for all those banks, but especially for Goldman Sachs, of course, that some of that key activity data in M&A and in ECM and DCM, I think will be quite critical. But really, what we're looking for is David Solomon and some of the other top CEOs talking about their outlook and how things change from here. Do we get a continuation of some of the reasons that have given this quarter already some signs of bright spots, or are they more worried about some of these areas ahead, and most notably, as we've been talking about, the consumer?
Our finance editor Adam Haig there with a preview of bank earnings this week. We have more ahead. This is Bloomberg.
Watching the Asia trade, taking a look at how markets are reacting this morning to the assassination attempt of Donald Trump over the weekend. We've just heard from President Biden at the top of this hour, really imploring candidates to cool their rhetoric following that weekend attack. But certainly what the polls are suggesting so far is really that move could further galvanize support around President Trump. Off the back of that, we are seeing dollar strength coming through, that prospect of further tariffs, looser fiscal policy certainly playing into it. US futures, again, a little bit high here. Chinese ones, though, looking for a bit of downside pressure ahead of the third-party plenum and a host of economic data.